So as for JJ Lake Business Center, so who we are and what do we provide? We are a co-working space manager. That's a fundamental layer. And also on top of that, we do host a lot of community events to help cultivate the community. And also we help investors and startups. So we're investors associate and we are the startups helper. So this is a co-working space. Some beautiful pictures here, and we are located in Mountain View. Some more beautiful pictures. And we previously host a lot of events by co-hosting with Silicon Valley partners, in average 2 to 4 events per week. But right now we are more focusing on our own events, Meet Your Next Investor Online. So in terms of the help that we can provide to investors, we help investors with a deal referral, and we help them with the executive program. We help them schedule delegations, and we help them host offline events and investor gatherings, etc. And also we design programs for startups as well. So we help startups with company registration and the PR and the marketing, and also with the global market access. So that's pretty much about us. And if you guys are interested in learning more about us, feel free to check out our website, jjlaker.com, or shoot us an email at info@jjlaker.com. All right, so that's enough about us. Now let's move on to today's main session. So Howard Chao, the principal at Doon Capital, and is going to discuss with today about a very interesting topic, strategies for Chinese cross-border entrepreneurs in an era of de-globalization and decoupling. So unlike JJ Lake's other investors, Howard has been in legal industry for many, many years, and he was the chair of the old Melvin Meyer's Asia practice, and also he has helped set up Shanghai, Hong Kong, Beijing office, and he was a veteran in cross-border business. Since 2001, Howard moved back to Silicon Valley, and he started investing via his investment vehicle, Doon Capital, 7 years ago. So Howard, so we have previously discussed on the phone about the potential topic for today's events, and why are you particularly interested in this subject area?
Thank you, Yifu, for inviting me to speak today. This is an area which is of interest to everybody in our community. It's an area that I've been working in, I've been working with China in cross-border investments for many, many years as a key part of my professional career as a lawyer. And for the most part, it's been a very upward trajectory, a very happy kind of subject area. Mm-hmm. But of course, as we know, in the last few years, it's not been so. Meanwhile, the world has to go on, business has to go on, and we have to deal with these challenges. And so I think it's worth having an open conversation about some of the challenges that we face in trying to do cross-border business between the US and China today.
All right, that's great. So, and also I forgot to mention for the audience who want to raise questions for Howard, and feel free to use the Q&A below. We will make sure to save some time for the open Q&A. So my next question is about the decoupling and what behind it. So as we all know that China and the US had 40 years of pretty good relations. And however, the relationship has been transformed from mutual benefit to geopolitical competition. So what do we mean exactly by decoupling now, and what triggered the decoupling, and what's the primary drivers behind it?
Yeah, we could spend a lot of time just on decoupling, and we should talk about it, although I'd like to also get to the nitty-gritty of what it means for business. But decoupling, as we all know, is really, generally speaking, the push to separate the two economies and the two societies by both sides, frankly. It's not just the US side. I think there's a push to decouple on the Chinese side as well. Mm-hmm. And it has to do, at the base, most fundamentally, it's a conflict at the geopolitical level. It's been triggered by many things, as we all know. It's been triggered in part by an emergence of a much more muscular China, a China that doesn't necessarily hide its strengths and bide its time anymore, as Deng Xiaoping originally prescribed. It's now a China that is taking a little bit more aggressive positions on quite a few territorial and political fronts internationally that it did not before. So that, of course, whenever you have a leading global power now being challenged by a second power in the world, as we all know, that tends to create conflict. Hopefully conflict that can be resolved, but there is definitely conflict. And at the same time, China feels that given this kind of emerging conflict, that China needs to rely less upon the US. And so China is also decoupling in many ways from the US. So I guess in general, that's how I would describe it, although we can go into the details. I mean, for example, I think it's worth discussing when we talk about decoupling, that decoupling is such a complicated subject because it happens at many levels and many dimensions. It happens, primarily, the most important level is at the technology level, which is, of course, very relevant for Silicon Valley. It happens at the capital flows level. So as we know, the US has imposed more strict standards and controls on Chinese foreign direct investment in the US. And so FDI Chinese FDI to the US has been reduced to a mere trickle of what it used to be. And then it's also starting to happen with respect to capital markets activity. So as you probably know, there's efforts in Congress to tamp down on Chinese companies listing in the US, or maybe even delisting them in the US. And then it's happening, of course, at the trade level, where President Trump has imposed all kinds of tariffs on China, and then, of course, China has imposed tariffs on the US. And so there's all kinds of trade impediments now that are happening. And it keeps going. I mean, we can talk about how decoupling is occurring at the people level. The number of Chinese students that are coming to the US is going to be significantly reduced. Visas are much more of a problem now. And of course, with COVID, travel is completely zero right now. So, the irony right today is that, what used to be a globalized world, we have more goods traveling than we have people these days. And then also, I think we can talk about decoupling at the level of soft power, because I think, as we know, the US has a tremendous amount of soft power around the world. China has been trying to build its soft power, and both countries are trying to limit the other's soft power in their respective countries. So all kinds of different dimensions of decoupling are occurring. But at the same time, I think we should not lose sight of the fact that these are the two largest economies in the world, and that their interconnections are so vast that if we were to eliminate 20% of interactions between the two countries, that would feel like a huge decoupling. But I think as a practical matter, there's not going to be 100% decoupling. It's just not possible. And so the question is, where does it go? How does it happen? It's a much more complicated subject than a binary question.
Yes, definitely. So the competition is getting severe, and as you mentioned, China is no longer as what it used to be. It's showing the muscle, and also it relies less on the Western world. So it's definitely raises a concern. So besides the words decoupling, we also hear the words de-globalization. This word has also been used a lot these days. So is this referring to US-China relationship specifically, or is now really a global trend?
I think it's much more than just the US-China relationship, although the US-China decoupling is very much a factor in deglobalization. Deglobalization was happening before COVID hit us. We all know we had Brexit as another example of deglobalization. There have been lots of populist movements around the world where governments around the world have been trying to be more self-reliant and less collaborative, and international organizations have lost their power, less and less influential. And so it's becoming more and more of a go it alone kind of world where each country is more and more for themselves. Then, of course, COVID has accelerated and accentuated those trends, and we can talk about COVID as well. But it's really, at a time when, in the old days when a crisis hit, that's when everybody came together. Now COVID has made everybody, look out for themselves, unfortunately.
Mm-hmm. So what will happen to the many supply chains that begins in China and the ends in US in that case?
Well, that's another very complicated question, because as we all know, China has for many years become the manufacturing center for the world, right? And many companies rely on China primarily for their sourcing. Of course, not uniquely, and they were moving sourcing to other countries as China became more expensive over the last several years. So there are other countries around the world that have benefited from that trend already, whether it's Vietnam or it's Sri Lanka or India or wherever, or Mexico. But so, when this decoupling trend started to appear, that was one factor in pushing some companies to move their sourcing out of China, right? And Trump was trying to push companies to do that and to move their sourcing, their manufacturing back to the US or to maybe to other countries. And then you had COVID that hit, right? And COVID hit, and people thought, well, that means that we can't rely on China so much anymore because, we have the supply chain problem from China. The sources of the supplies from China are cut off. So everybody thought it was a China supply chain problem. But then COVID hit the US and the rest of the world too. And so there was a demand problem. And so now suddenly it's not just a China supply chain problem, because the rest of the world was both the demand and the supply was down, and you don't know where the next pandemic is going to come from, right? It could be China, it could be Vietnam, it could be India, it could be Africa, it could be anywhere. And so the reality is that I think big multinationals are now rethinking their supply chain strategy to make it, of course, more diverse, more resilient, move it closer to the ultimate destination and customer, and also taking into account, I'm sure, the decoupling and bad relations between the US and China. So that all figures in. But I think one thing we can't forget is that if you are trying to keep your sourcing close to your ultimate market and customer, well, China's a huge market, right? So you're not going to move your sourcing of goods and parts to service the China market out of China, right? So I think that's something that we can't forget. I mean, China is the world's largest market for automobiles, for refrigerators, for whatever, everything, many things, but many things. So that is a reason why supply chains will not completely move out of China, obviously.
Definitely. Yeah, COVID has been a big hit for the US, and I think the Santa Clara County is entering into the phase 2, and the California state, I heard they're planning entering into the phase 3, probably early next month. Well, hope the economy can get back soon after the COVID. So next, let's talk about the global strategy. Let's put ourselves into startups' shoes and talk about the global visions. So it's used to be that with the internet and open markets, and in recent years, many startups aim to go global fairly early in their business plan. Is this still possible for tech startups to maintain a truly global strategy, especially at the beginning of their business?
Yeah, that's a good question. So as you probably know, in the beginning of Silicon Valley, startups really focused on the US market, and maybe even less than the whole US market. But the joke was that VCs in the Silicon Valley only invested in companies in their zip code, right? And so they had everybody had to be close by, and they were selling mostly close by. And even when I came back to the Silicon Valley, back from China in early 2000s, it was very unusual to have a startup that was incorporated outside of the US, the Cayman Islands or some other jurisdiction. Everybody said, well, we are familiar with Delaware, or maybe California, but we're not familiar with all these other jurisdictions. And
Mm-hmm.
so, it was only in the last, say, 15 years that Silicon Valley went kind of global, right?
Yes.
But it became global partly because technology and the nature of technology changed, because there were a lot of new technologies that permitted startups and technology and products to go global very quickly, especially software, obviously, right? So if you have the internet and if you're selling software, you're selling stuff that's being made in China, it's a lot easier for you to go global quickly. And so that happened. And then of course, this de-globalization, decoupling hit. And so it's become a very complicated picture. And I think depending on which technology you're looking at, which sector you are, which market you're targeting, what kind of product you are, you may or may not be well advised to try to go global very quickly. I know of some startups where it just wouldn't make sense. For example, I know there was a genomics startup that was doing business both in the US and China, and I heard the story from a prominent VC, which they invested in. But because of concerns of both the Chinese and the US government about data and where the data, who had access to the data, et cetera, the ultimate conclusion was that they had to split the company into two pieces, right? Because if it was one company servicing both markets, then the two respective governments would be uncomfortable with one with the other, right?
Yes.
So I think that's an example. On the other hand, there are companies out there where I think it's still possible to do both countries,
yeah,
do both markets. So it really depends. You have to do much more of a thoughtful analysis of the technology, the markets, the political situation, right, and the regulatory regime.
So give us an example on the startup companies that are still be able to keep the global vision at the current moment.
I'm sorry, I missed the question. I got a bad connection.
Yeah. You mentioned that there are certain business no longer making sense under the current circumstances. However, can you give us some examples about some startups might still keep their global vision as their early life?
Yeah, so, well, early or even late life. I mean, if it's technology that's not very sensitive, right? Mm-hmm. But it still could be very high tech, right? Consumer wearable devices, for example, may be much less sensitive, right? There may be food or agriculture startups that may be less sensitive, right?
I see.
I think there are many kinds of technologies that could be potentially doable in both markets. And then, you also have to talk about, when we say global, there's the rest of the world too. I mean, the world does not just consist of US and China, right? Yeah. I mean, the rest of the world is bigger than US and China put together, right? So when you think about that, Europe, the developing world, that's all a potential market for startups. And just because the US and China are decoupling does not mean the rest of the world in China is decoupling, right? And one fact that I think it's worth remembering is that there are over 120 countries in the world that mm-hmm. trade more with China than with the US, okay? So I think it's going to be hard to decouple those countries with mm-hmm. China, right? And frankly, I don't think the US will be completely decoupled either. I mean, the amount of trade that happens between the US and China, of course, is enormous. Again, I don't think it's going to be a complete decoupling.
I see. So next question, I would like to cover some, because the majority of JJLA community are Chinese Americans, and most of them are entrepreneurs or tech professionals, pre-entrepreneurs. So how should they adapt to this new development if they are targeting both markets in the US and China?
Yeah. Well, first of all, I'd say get a good lawyer. Not me, I don't practice law.
You got any recommendations?
I don't practice law anymore, but talk to me afterwards. So, obviously this is an area where there's a lot of technical regulation, and you don't want to make a mistake, right? especially in this political environment. You want to be very careful and play by the book, play by the rules. You can be committing a crime if you transmit technology to a destination without that's not permitted, right? So you really have to be careful. So there's the initial analysis of what technology you're talking about, and what restrictions there are both on the technology and the product that incorporates the technology.
Yes.
The most recent actions against Huawei show that it's not just the technology and not just the product, but it's also which company
exactly.
you're selling to, right? If it's on one of the blacklisted companies, then you should be you shouldn't be selling to them, right? Mm-hmm. If you're U.S., obviously. On the flip side, of course, there are a lot of people that have set up companies back in China, right? And then there's a sort of reverse question, whether can you be doing business in the US and Europe and the rest of the world if you're starting out in China, right? And so it's a very complicated set of calculations. I mean, first of all, where do you get your capital? Where do you incorporate? Where is your headquarters? Who do you sell to? Which markets are you trying to sell to? Where are your customers? Are they global? Are they in Europe? Are they in the US? Are they in Southeast Asia? Obviously, if you're a Chinese-based company, selling to the US, especially in sensitive areas, is going to be more and more difficult these days. Mm-hmm. But as I said earlier, Europe is probably less difficult, although there are still areas where Europe will be difficult. And then, of course, there's Southeast Asia, East Asia generally, where, if anything, it's getting a bigger and bigger client or a customer for China, and the rest of the developing world. So it's a very complicated analysis. Yeah,
that's really a lot of factors that the startup should be looking at. So in conclusion, get a good lawyer.
Well, that's one factor. I mean, you have to. Yeah, the lawyers don't know everything. They can't give you all the answers to all the questions, right? I mean, when you're trying to sell in the U.S., you have to analyze, for example, let's say you're selling into the financial sector, right? And you're selling software that could be fairly sensitive and used by the banks, the big banks. Well, if that's the case, then the U.S. government could take the position that's critical infrastructure, right? Yeah. That could be very sensitive. So at that point, you're probably in one of those situations where you're going to either have to be choosing, to sell in the U.S. and have no real connection with China, or vice versa, right? And you could probably still sell to Europe. You could sell to Australia, to Japan, but you probably don't want to take a capital from China. You probably don't want to, sell into China, right? So it's a case-by-case analysis.
I see. So, and also we got asked a lot by startups about picking sides. So will company be forced by this new circumstances to choose between the US and China, or will this affect only the Chinese companies?
Well, as I just said, I mean, I think it depends on the technology and the circumstances and the industry you're talking about. You might be forced to choose the market you want to play in.
I see.
You might not. Depends.
I mean, a lot of us living in the US probably start from the same approach, going to school here and get a job as a big tech company, and after a few years become an entrepreneur. So for those startups who are originally from China, do you think it's better off doing their startup here in the US or in the US or in China?
You're talking about the entrepreneurs?
Yes.
Right. Again, I mean, I hate to keep saying it depends, but it really does depend. I mean, for one thing, if you are, there are many things now where if you're not a U.S. citizen, it becomes harder and harder to do, right? So it depends in part on whether you're a U.S. citizen. If you're working in a non-sensitive sector, then it may not matter, right? But if you're in a sensitive sector, then you probably need to be a US citizen founder to be able to do everything that you want to do. And it depends on where you feel your greatest personal strengths are, because you may say, well, I have a lot of personal relationships in the China market. I have very few relationships in the US. I only came to the US 2 years ago.
Mm-hmm.
I don't know the US very well. Then how are you, you have to compare the two opportunities, which one is a better opportunity. And you may conclude that, you just have much bigger upside in the China market. And again, I don't want to just limit it to the US and China. Obviously, you could be selling in other countries as well.
Okay, yeah. The citizenship definitely draws a line here in this case. And I also heard that the immigration department is probably going to be controlling on the H-1B and the OPT. That affects a lot of the Chinese students here in the US. So
Right.
Next, let's talk about the startup raising fund from Chinese investors. So there used to be Chinese money flowing in the Silicon Valley before, especially before 2018, but now the situation has fundamentally changed. So do you think US startups should avoid taking investments from Chinese investors at this particular moment?
Yeah. Again, I would have to say it depends, right? Because again, if you're in a sensitive area, then it's, I can see many problems with taking funding from a Chinese investor, right? But even going backwards before that, I mean, under the new CFIUS rules, any foreign investor, whether it's Chinese, it's German, it's Canadian, it's Israeli, or whatever, there is a waiting period, generally speaking, if you have any questions about whether the technology is sensitive. Right?
Mm-hmm.
So before you even decide to take money from a foreign investor, you have to decide, is this an investment where I'm going to have to wait several months before I take their money, and is that acceptable to me, right? And is it going to be approved by CFIUS, right?
Yeah.
Now, if it's a English investor, then it probably is not going to be a problem, right? But there still could be a delay. And then if it's a Chinese investor, then depending on what kind of technology is it and what kind of size of investment, percentage-wise, et cetera, there could or could not be problems too. So, but generally speaking, Chinese investors themselves, as you know, have cut way back on their appetite for U.S. investment. So, you may not even have the option to have a Chinese investor come, because there's just very little Chinese money interested in the US these days, as you know, I'm sure.
Yeah, so speaking of CFIUS, well, we have heard many buzzwords these days like CFIUS, export control, FIRMA, etc. But can you help our audience to get a better understanding about those terms in short? Are there any general rules that our founders should follow or at least pay attention to?
Well, CFIUS and export control are very technical areas where even as a lawyer, I would not attempt to try to navigate those areas without an expert at my side, because they really are very specialized.
Mm-hmm.
And so, but in general, what you need to know about CFIUS, of course, is that it's a Committee on Foreign Investment in the US. That's an interagency committee in the US federal government that reviews foreign investment in US companies, but with particular focus in this case on technology and critical infrastructure and Chinese investors. So and the new rules generally make it so that you probably in many cases have to get their approval before you make the investment. And if you don't properly follow the rules, then the investors' transaction money could be unwound. So they don't want to take that risk. They don't want to be ordered by CFIUS to undo their investment. Mm-hmm. So they will want to go through that process if there's any risk, is my guess. Export control is the other key area. It is a separate area of regulation, and it means mm-hmm. that if you in any way transfer or transmit sensitive U.S. technology to a foreign party, either physically or in electronic form or in some other form, then you may need to have a license in advance of that and effectively get approval. Now, not for everything. In some cases, there's no license, there's no approval required. But it depends on the technology, and so you have to consult with a lawyer about where your technology stands.
That proves the point again to get a good lawyer on your side as a startup.
Right.
So, here's my last question. And also for audience who, if you guys have questions for Howard, feel free to use the QA to raise questions below, and we'll make sure to answer them one by one. And my last question is, we have talked about enough challenges or difficulties. So what kind of new opportunities this decoupling may bring to us? For example, like people have been talking about by using blockchain to reduce trust, or we got like third-party data operations to help with the data monitoring. So what do you think on that?
Well, the old saying goes that anytime there's adversity, there's also opportunity, and I think that there are lots of opportunities if you look for them, if you're careful, and if you do your homework, right? Let me give you some examples. So, and this may be a kind of a negative example, but there are a lot of Chinese investors that are selling their investments now in the US. Mm-hmm. That's an opportunity. So if you're a non-Chinese investor, but you know those Chinese investors, you can help arrange a deal where they sell their investments to somebody else, right? There are some transactions going on of that type, right? The China market is booming, right? It's still booming. Of course, COVID has come and it's kind of going away. China seems to be coming back very quickly, and so when China finally does come back, I think there will be lots of additional opportunities in the wake of decoupling, because as I mentioned earlier, there is now a huge effort by the Chinese government to make the Chinese economy more self-reliant. And so there are many new businesses, many new technologies that are being created, which are domestic and where they will have an advantage because they're domestic. Just like there are many new domestic factories that will be built in the US that will have an advantage because they are domestic, right? So the same thing is going to happen in China, or is happening in China. Mm-hmm. And then, we talked about, the complication or challenges of doing cross-border business. Well, as I said, it's not impossible. I think there are many situations where it's possible to do it. You just have to know how to do it. And if you think about it carefully, if you do your homework, I think it's there's a significant opportunity to do cross-border business in a world where some people have given up. They say, well, it's too hard, I'm not going to do it. So if they say it's too hard, then there's less competition, and you might be able to do more, right? So mm-hmm. I think there are many opportunities coming out of this new world. Those are just some examples.
I see. So definitely, so there are always the opportunity always associated with the difficulties. So in terms of the COVID-19, and then can you give us a prospect on how will the government policy or government environments will change after the COVID-19?
You're talking about in China or in the US or everywhere?
In both ways, both in US and China.
Right. Well, there's so many ways, right? It depends on which area you're talking about. As you all know, as I alluded to earlier, every government is going to be wanting to have more national industries in medicine and health that they can rely on, right? So that's going to be a big change, because the U.S. relies heavily on Chinese imports of many medical supplies and equipment. That's going to change, right? Every country is going to want to have their own national industry in medical equipment, supplies, and healthcare mm-hmm. in the future, or not completely but self-reliant, but more than before, right? Yeah. There's going to be more of a fractionation of the technology world, right? That's not a COVID thing. It's really a decoupling thing. But there's going to be a technology block led by the U.S. and a technology block led by China, and those are not completely separate, but they are different blocks. And the analysis of those two blocks and how they interact with each other is going to be very complicated, because there'll be some countries that will fall kind of into two blocks. They'll want to be members of both blocks, even though both blocks say you have to choose, right? And so that's going to be a complicated analysis. There's going to be what area do you want to talk about? I mean, every single area is going to be different, I think.
It's all different. Yeah. 2020 has been...
The world of travel is going to be very, very different, right? I mean, the world of hospitality and travel is completely different after COVID, and it won't return to quote normal for a long, long time. And even the new normal after 2 or 3 years, even after the vaccine arrives, assuming we have a vaccine, it's still going to look different, I think, than what we had before. So yeah.
A lot of the industries have been fundamentally changed because of the COVID, and this year
right. You think about travel from the perspective of the Chinese traveler, right? China was the world's most important set of travelers before COVID, right? And there were more Chinese tourists around the world than any other nationality, and they each spent more money per capita than any other nationality, right? And so think of all the name brands that relied heavily on Chinese tourists for their revenue, right? And now those tourists are gone. When are they coming back? Well, maybe they'll come back in a little bit, maybe in a year or two, who knows? But I think Chinese tourists are going to be less numerous than before, because they're going to be more cautious, and because the local people are going to be more cautious. I think Chinese are going to say, well, gee, we've got COVID under control in China, but it's not. Is it really under control in Italy? I mean, do we really want to go to Italy? And are people going to be friendly to us in Italy? Because maybe they're going to blame us, in Italy. Who knows? So it's going to be complicated.
All right, that's enough about our fireside chat. So let's save some time for our audience. Let me just open up the Q&A boards here. So the first question from our audience is from Caroline Liu. How can the U.S. wholly owned subsidiary export transfer technology and IPs to its China parent company with no friction? And does it circumvent the restrictions as it is a wholly owned subsidiary?
It doesn't matter that it's a wholly owned subsidiary. It doesn't matter what its status is. It only matters that you are transferring technology from the US to China. And if that's happening, then you have to analyze, is that permissible? Is it possible? What technology, which category does the technology fall in? And is it one of those controlled kinds of technologies? And if so, you need to get a license or not, right? So it doesn't matter that it's a subsidiary. They could be unrelated companies. It could be subsidiaries. It's the same analysis.
Cool. And the next question is from Jia Kuan Wu. Most of the U.S.-China relation issues are out of our control. Is there anything we can do at a personal or company level to mitigate the risk?
Yeah, I'm not sure what kind of risk Ji-Kwan is trying to mitigate. I mean, risk of bad relations between the U.S. and China. I don't know. Make friends with Americans or Chinese.
Well, get a good lawyer can definitely solve most of those risks.
Right.
All right. So next, let's say. Let's answer this one. So it's from one of our audience asking, anything proactively we can do, such as lobbying, legislation side, or should we just passively wait and tolerance the hog fraction dominating U.S.-China policy?
Well, I think it really depends on who you are, right? if you're a Chinese American and you're a Chinese citizen, of course you can lobby, you can express your view because you're an American citizen. I'm an American citizen. So I should feel completely free to express my view that you shouldn't be racist about China, that you should be even-keeled, that you shouldn't be a warmonger, right? Steve Bannon says the US and China are already at war, are his words, right? I mean, it's kind of ridiculous. I mean, it's extreme, right? But if you're a Chinese citizen, you can't lobby. I mean, first of all, I don't think it's legally possible to lobby, but also, I mean, it's very tricky to lobby, put it that way. And plus, it's probably not a good idea anyway, because it's just from a PR point of view, you're not supposed to be, you're just like in the American citizens lobbying in China for party politics in China. I mean, it's probably not a good idea, right? So I think it depends on who you are.
And next question is from Harrison Rose. With the election coming up in November, that will likely give the US a chance in administration and hopefully Congress. In general, the stupidity of this Cold War may end. Execution of decoupling during the next 8 months need to be considered in technology business strategy. How do we plan for the multiple diverting scenario? Harrison?
Well, I'm not sure I fully understand the question, but if the assumption of the question is that that there may be a change of policy if the Democrats win, I think that that's probably a wrong assumption. The Democrats are in many cases more hardline about China than the Republicans. I think there'll be certain differences in terms of how the Democrats approach it. For example, I think they will not be as, they would not have enacted the tariffs like Trump did. I mean, Trump, I think, went beyond what is normally permitted by U.S. law in enacting the tariffs. But the Democrats are very hardline about China. Many of them are very negative about China too, right? So I don't think we should assume that the general policy of decoupling on technology, foreign direct investment, in certain other areas is going to go away. I think it's here for the long term.
Yeah, it's a national thing now. So the next question is actually a very specific question. Is from Johan Fang. We are hiring contract software engineers from China. Is there going to be a problem? Something that the U.S. government will regulate?
I mean, it all depends again on your context. I mean, if you're doing contract software engineering for a company that helps design baby strollers, then I don't think the U.S. government is going to be too worried about that. Probably not, at least. But if in the course of doing the contract software engineering, you have to transfer certain code to China, and that code is sensitive code that is restricted, then you may have to get an export control license. I don't know. It just depends. You can't ask these questions completely in the abstract. It has to be grounded in a specific situation and technology.
Mm-hmm. The next question is from Yi Ke. Wow, this is a very interesting question. So do you think the next generation American-born Chinese will feel restriction to work in sensitive area, cutting-edge technology like AI or quantum computing?
Yeah, so if they're talking about U.S. citizen Chinese, hopefully not, because U.S. citizen Chinese should have every right of any other U.S. citizen, right? So if that's the question. As a practical matter, is that going to change? Will there be suspicion? I don't know. I mean, we had, as you know, the Japanese internment during the World War II. Mm-hmm. So that could certainly happen if there's I think there could be bad things that happen if there's actual hostilities that occur between the US and China, right?
The next question is from Tanya. Given everything discussed so far, do you recommend incorporating in the Cayman Island?
Yeah, again, incorporating the Cayman Islands doesn't solve any of the problems we've been talking about. So it's done for other reasons, but it doesn't solve any of the problems we talked about.
We actually get that question a lot from startup in the near few months. Can you elaborate a little bit more on that part? Why starting a company, incorporating a company in Cayman Island won't solve the problem?
Well, if you're transferring US technology to China and your parent company is Cayman Islands, you still are restricted by US regulation. It doesn't matter where your parent company is. If your parent company is a Cayman Island company, but it has operations in the US, and it has people in the US, then you're still subject to CFIUS. And so CFIUS can regulate who invests in you. Mm-hmm. This problem comes up, for example, if say you're a French company and your headquarters is in Paris, and you have an R&D arm in Silicon Valley, and it's an important R&D arm. And then the French company is proposing to be invested in by a German company. Well, then that French company has to go to CFIUS to get approval, right? Mm-hmm. So it doesn't matter that they're incorporated in France. It doesn't matter that the buyer is German or investors are German. All that matters is there's something sensitive in the United States that is being invested in, okay?
The regulation will go through layer by layer.
They ignore the layers. They're talking about the substance.
Mm-hmm. Yeah. So next question is from Pierce Smith. Do you think real estate worldwide would attract Chinese investors?
Well, it always has for the last many years. I think it will continue to. I mean, Chinese investment in US real estate is down, as we all know. So that may suffer because of decoupling. But maybe Chinese investment in other real estate will therefore benefit. Who knows? After COVID, of course.
Surely. So next question is asking, could you please offer some guidelines on finding a good lawyer?
Well, I think finding a good lawyer depends in part on finding one who specializes in the area that you're interested in, right? A good lawyer could be very good at patent law, but very bad at VC financing, right? So a good lawyer is not a good lawyer for all purposes. And of course, there are many other considerations. I mean, it has to be a lawyer that is somebody you get along with personally, someone whose fees are acceptable to you, because the lawyers can be very expensive. Lawyers that are close by and convenient, lawyers that are not too busy, because good lawyers tend to be very busy.
Yeah.
So, there are many factors. And of course, finding one is always a challenge. I think it's best to talk to friends who've used the lawyer and have had personal experience with the lawyer.
Mm-hmm. The next question is about a fintech digital currency. So Howard, you're looking into that area as well. So how is the digital currency that China is planning to implement going to impact foreign investors or entrepreneurs?
That's a subject I've not really thought a lot about. Clearly, the Chinese government is trying to create a new platform where they can make payments and transfers more seamless. I suspect it also has to do with moving control over transfers and the payment system back into the banking system and having the government have a better visibility into what is happening, right? And so, but it also, I think, has to do with maybe going international with it too. I suspect that there is a little bit about trying to displace the US dollar in that grand plan. But frankly, I have not researched it that much.
The next question is also a question that we got a lot. So what are the recommended company structures in the current situations, such as headquartered in China or US, or by using VIE or joint venture, etc.?
Yeah, so
That depends.
it's like asking what kind of clothes should I wear? You know, it depends. Depends. Are you an athlete? Are you fat? Are you skinny? Are you young? Are you old? It depends. You can't really give one answer for everybody, right? So I can't answer that question.
So let's put it this way, Howard. Can you give us an example about a startup company that you or the law firm has helped to set up certain structures?
Yeah, an example of a corporate structure. I mean, there are different corporate structures depending on what your situation is. For example, let's say your business is in China, right? Mm-hmm. Your primary headquarters is in China. You would never set up a US Delaware company to do that, right? It would be very unusual to do that. You would probably set up a business, a company in China, and maybe a holding company in the Cayman Islands, depending on the situation, right? Mm-hmm. But if you're doing business in the US and you want to get funding in the US, then you will not ever incorporate a headquarters in China, right? And you might incorporate a headquarters or a holding parent in the Cayman Islands, but it depends. There are complicated tax and US considerations. So.
Mm-hmm. Next question is from Yiku. So is there a substantial risk that an US battery startup will not get the export control license if they would like to conduct a proof of concept or other form of strategic collaboration with a Chinese battery OEM, given the DOE kick off the energy storage grant challenge, which aim to bring the battery manufacturing capacity?
So that's a question, that's a very good example of a question where you need to go directly to an export control lawyer expert, because I can't answer that question.
The next one, are you starting to see a shift in investor focus between debt and equity due to the COVID or from decoupling? Shifting from equity investment to debt.
So my understanding is that in China, the venture markets have come back from COVID very strongly. Mm-hmm. And so there's the number and the amount of venture financings in China in the last couple months was actually more than the same 2 months last year. Okay, so that's just normal equity venture financing. In this country, we're in the middle of COVID, right? So there are a lot less financings happening right now. Some of them are sort of rescue financings. Rescue financings very often are debt, right? Because if you're a rescue investor, if you're a debt investor, then you are at the top of the priority stack. So if that's the question, yes, I think for rescue financing, it's more common to have debt, although in some cases you may want to buy the whole company, in which case, of course, you're just buying the equity, right? So it depends.
The next question, are open source projects developed at US universities affected by CFIUS compliance as well?
So CFIUS only regulates investments in companies, right? So if it's an open source project where there's no investment involved, then CFIUS is not involved. So I don't know if that's the question, but normally if it's an open source project, then it's not a company, it's not an investment, so there's no CFIUS involvement.
So next question is from Nico. How's the attitude of US funds in terms of doing cross-border investment in startup in China at the moment?
So the US funds that are investing in China have become very specialized, and they usually run their Chinese investments out of an office and a branch or a separate, even a separate fund based in China right now. So it's almost incorrect to say it's a cross-border investment anymore, because it's actually a fund that has its base in China, and the partners are based in China and they're investing in China. It just happens to be that the money, the LP money, is coming from the U.S. Mm-hmm. So those funds, those investors, of course, they're very interested in China because that's all they do. They just invest in China. Now, maybe the question you're asking is, are LPs continuing to be interested in China? Do they still want to put money into those kind of funds? My impression is that the LPs continue to be interested in China because China, if anything, is accelerating out of the COVID crisis faster than any other country. And so if I were an LP, I would be fairly interested in continuing to invest in Chinese tech. I mean, put it this way. In the US, if you look at what's happened over the last 3 months, the companies that have done the best in spite of COVID are primarily tech companies, right? Mm-hmm. Companies that are online, that are digital, that are remote, that are robotics, that that are not affected by infections, right? And or big platform companies like Microsoft or like Facebook or like the others, and so Zoom. So that's despite the fact that the U.S. economy has done very, very poorly in the last 3 months, right? I mean, we know how bad the U.S. economy is right now. Mm-hmm. Now, in China, you have a tech sector that is equally big and resilient and strong and has a lot of remote and digital and in the cloud type operations, but they're operating in an economy that's actually accelerating now. It's coming back more quickly. So I think that it's kind of a double plus there, whereas in the US you have a technology plus but a COVID minus, right? Yeah. So,
after all, China is a huge market. So we only have time for the very last question here. So let's answer this one. So can you talk about the project you prefer to invest in China, such as telecommunication field? I mean, during our webinar, we haven't really talked about Howard Chao, your own capital, the Doon Capital yet. Yeah. I know you are particularly interested in certain fields. Can you let the audience know particularly what kind of fields are you interested in?
Well, most of my investments are in the U.S. actually, U.S. tech. Yeah. I have some investments in China, and in this environment, as I said earlier, I think it's actually probably a pretty good time to invest in Chinese tech along the same themes that I just talked about earlier, which would be basically businesses that are resistant to COVID, businesses that actually have tailwinds because of COVID. It's not just telecommunications, but anything that's remote, anything that's digital, anything that's cloud-based, anything that's robotic, anything that's self-driving. I just saw recently a last mile delivery self-driving robot. I think they're going to do well in this environment. So I guess that's a general answer to that question.
All right. Thank you very much, Howard. Thanks for joining us for tonight's webinar. And also regarding our next Thursday's events, we're going to do a special episode, given the consideration that the JJ Lake is going to reopen next week. So we're going to settle some details down, and hopefully we can send out some announcements by tomorrow morning. So stay tuned. And also thank you very much, audience, for joining us tonight. And thanks, Howard, again. And you guys have a great night.
All right. Thank you for having me.
Thank you. Bye-bye.
Bye-bye.